Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on PCLN NVDA TSLA NFLX CMG. So PCLN followed through for the bulls, but compared to the strength that the market saw, not really as strong, and anticipating a lower high is going to form here. And we could be looking for an equilibrium pattern after such volatility following the earnings report. Volume is dropping off and expecting a tightening range to form. So we've got resistance, looking at exponential resistance, which will be tested tomorrow as it drops down lower. And then we're looking up at 1900 psychological and 1920 before we start filling the gap. I would expect a lower high to form compared to 1920. And if the bulls are going to reverse this momentum, they're going to have to form a lower high, a higher low, and then a higher high to start heading up to this gap fill. So still leaning bearish in terms of I would be looking for a bearish entry opportunity as the bulls tire themselves out on this bounce attempt. And the only thing that would really change that would be if we saw an increase in bull volume and a move up to 1900. So the weekly time frame is back testing the middle Bollinger Band resistance. That level of support had held for all of 2017. It is now resistance and being back tested at 1872. We'll have to see where we close relative to that level by the end of this week. NVDA, good lord, the bulls were on fire. Analysts are bullish. And you have to keep in mind, if you are following the cryptocurrency space, that is a significant reason why we're seeing these names in the semiconductor space run, because the correlation between their products and the crypto space, where people that want to mine these cryptocurrencies are buying their products, and the stronger these cryptocurrencies are, the more people that want to mine them. So you have Bitcoin hitting all-time highs 4 days in a row in the last 4 days. Cover of the Wall Street Journal, it's just all over the place. It's starting to make its way towards social adoption in terms of the general public. And we are seeing that reflected in this sector where the bulls are racing hand over fist to buy any dips. And we had the last dip. We saw a rocket ship recovery to new all-time highs. Here we are with an earnings reaction and a rocket ship recovery, an 8% move today. Huge gains to the upside, and we're looking right back at resistance 172.66 and the all-time high of 174.56. This is a long-term name to stick in your portfolio and forget about until we see the weekly trend change, and then it would be time to lock in those profits. But really, the whole move that we have been seeing is extremely strong, and we've gone 400% in a year and a half. It is one of the strongest names that I have seen in the market in a year 2017 where the market is on absolute fire. To be the lead bull in an extremely bullish market is certainly saying something. So Tesla on the daily time frame, strong, healthy consolidation where the market dumped. Tesla certainly did not dump. It had bullish momentum from earnings at its back, and we saw a higher low form and a bullish candlestick on Friday. 353.62 is our new base of support. Bulls trying to break 370 to see continuation. That is the key resistance to be watching. If we cannot break 370, we still have the potential of the bearish reversal doji on the weekly time frame to form. If we do break that resistance, we're looking right back at the all-time high. So the next couple of days is going to be key. There's a gap to the downside now at 361.26, and we did close with a little bit of weakness. So if we see some weakness tomorrow, the gap fill will be the first target, 361.26. And again, that key support in the short term for the bulls to stay in full control on the daily time frame is 353.62. Netflix on the daily time frame is very tight, and we're seeing exponential resistance. Netflix stood out as a lead bear in the tech sector very, very clearly today, and it would have been a pretty ugly day, in my opinion, if we saw the SPY and tech sector gap up open fade with some profit taking. Fortunately for the bulls, we did not, but we were on the verge of a breakdown on Netflix. We just have two support levels to be watching of 168.80 and 167.60. Break those levels, and we're right down to the gap fill at 163.55. So still weakness rejecting from exponential resistance. We've seen lower highs 5 days in a row on the daily time frame, 172.58, 172.45, and on the weekly time frame, it's still healthy consolidation at this point. We're still trying to hold the exponential support. A month of consolidation is taking place and not even giving back that last bullish candlestick to the upside. So we are going to form a higher low on this weekly time frame. It's just a question of when. So the daily time frame is bearish, the weekly time frame is bullish. So trying to balance those two out depending on the outlook and time frame of your trade depends on which direction you are looking in. CMG, bears in full control, same story forever, and we are losing support. We only have one support here of 320. No follow through for the bullish reversal candlestick. 4 days in a row, we're looking at similar action with the inability to confirm reversal candlesticks and exponential resistance continuing to drive the price down. So 320 is support. The next support level after that, you have to look back about 3 or 4 years, and it's at about 315 to 317, a little range there of previous price action. And if that breaks, we're looking down at 300. So the bears are in full control. There is no sign of the bulls. RSI does not mean anything in this name at this point, and I do not suggest any kind of bullish entry until the 8-period exponential moving average becomes support, as it has been resistance for so long. Weekly time frame, same thing. All-out dump, 2486 is support, or I should say 2486 is the RSI. And again, we can look back at history, and the last all-out dump we saw on bad news, what did the weekly RSI level hit down there before we saw a significant bounce take place? And that was down just above 20. And we did see a bounce from there, from 400 up to 541. That was a very significant 30% plus bounce. So we are going to see a significant bounce play out. And by significant, I mean at a bare minimum, 10 to 15%. But we just don't want to try and catch this falling knife at this point, as we will see signs of it coming. Volume climax, big bullish reversal candlestick was the signal back then. We'll be keeping an eye out for something similar, but obviously no sign of that at this point. I appreciate you watching. We'll check back in tomorrow. I hope you have the best night of your life.